Hello, this is Compound Interest Stock Guy, and today in this video I'm going to go through three companies that I believe can be very big, strong players in the cannabis space in 2020 and 2021, so stay tuned. I'm also going to talk about some of the most profitable companies and companies that are getting to that level as well on New Cannabis Ventures revenue ranking from US reporting companies and Canadian reporting companies. So stay tuned. If you're new to the channel, please subscribe, hit the bell down below so you're notified when I upload a video. Give me a thumbs up. I do truly appreciate it. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, or you've spoken with a financial advisor. So yeah, this is my second time trying to do this. So I appreciate all my viewers and subscribers. I was gone away for 2 months. Now this is going to come into some. I'm going to bring uh, some better kind of videos that are more helpful towards investing, as far as looking at the charts going, as far as looking at the RSI, going through the financials, things of that. Financials, big financials are coming out in mid-November, end of November. I'm gonna be probably pretty busy with that as long as I don't start working, which I don't think I will. So yeah, I got a lot of good stuff coming out. Just gonna bring some solid information as I think I've been doing. You know, let's just get into this now. So these are the companies that I've been talking about, and I'll show you why. Is Truly 57.9 million last quarter, 20.9 adjusted operating income. Okay, so that's what that means is, okay, with all their expenses and all their revenue, they come up on top 21 million last quarter for 3 months. 3 months. No other companies doing that. Now you got Village Farms that's just running from behind. See, they're used to playing in very small margin for a long time. When they were in vegetables, they're still in vegetables, but tomatoes is very low margin business. So now they're in a very high margin when they're selling their cannabis. And so they're not finding this tricky at all. They're dominating it, right? 12.2 million last quarter in cannabis sales and 9.3 in adjusted operating income. Okay, I think that's the company. These two companies are solid companies. As long as they keep executing, there's no surefire win as far as the cannabis companies goes, but those two companies at the prices that they're at right now, you know, uh, if you hold those companies for the next couple of years, or I mean, even if it was 6 months and maybe it doubles or triples by then, and you sell your position, I don't think you can do too wrong with those two companies. Again, I could be wrong, and the whole cannabis space just completely disintegrates, but I don't think so. I think people are going to continuously smoke their cannabis, and Village Farms is going to get growing hemp in USA. So those are two companies that are solid, and they're on top of their game. So a new thing that I'm probably gonna start doing is, when there's the financials. This is my own idea. If somebody wants to copy it after I've already announced it, look, it wouldn't be the first on YouTube where someone's copied something that I've done. But basically, what I'm doing is, it'll be a report card. It will be a report card. I mean, so it'll be okay. So it'll be the compound interest stock guy financial report cards. So going back from these report cards, if I was to look on them and I was gonna when I would do that, I would be basing as well on their market cap as well. Like, I'd put that into, it's almost, it's like you're baking a cookie or whatever. You put all these ingredients together, and then when you're looking at the financial reports, you're looking at their cash flow, you're looking at their expenses, you're looking at their net income, you're looking at their inventory, all those things, right? And they're growing the revenue. So for these companies, because they're doing profitable, the top most profitable companies in the whole cannabis space, I'm gonna give them A pluses. A pluses. We're in the first year. We just passed the first year of legalization in cannabis, and absolutely, True Leaf and Village Farms, they get an A plus for me. Now, when you look at like an IIPR, that's like a B plus, and Charles Webb's like a B plus, Planet 13's like a B plus, B. CV Science is around a B, Grow Generation a B, and then when you get into other companies, it's like, okay, you get like a C plus, Curaleaf get a C plus, and then you go down the list, it's like a C, and you know, it's the revenues on everything, right? The uh, maybe I would give them a higher grading. Maybe I would up it where like anything that's a net income will be a B plus, and then once you get into like low losses, maybe be a B. But as far as it goes, those are definitely A pluses. Now, when we're looking in the Canada space, Valence Growworks and Metafarm Labs, they're dominating. Um, I got the VGW versus Metafarm Labs in fundamental metrics, and I called it. I'm not trying to brag, but it's the true reality. Is I knew based on their profit margins, their percentage profit margins, that Valence was going to kick up their notch, and they were going to end up beating them for their net income eventually. And this is just the start of it, right? You're looking at about 70% profit margins on Valence Growworks. Now, I talked to some guy on Twitter, and I kind of debated him. We had a good conversation. He ended up following me, but anyways, he's saying that he thinks that Metafarm, he's very long on Metafarm Labs and Valence Growworks, which, hey, I don't think you can go too wrong on both those players moving forward. Big demand for them, so, and they're not too expensive. They're like anywhere from like Valence Growworks around like 330 and Metafarm's like 600 or so market cap. At 4.2 million in net income, like that's about 17 million per year, and then a market cap of like 600, somewhere around like 35 37 PE ratio, which is pretty much like it's at the top. Like it's not the same as Village Farms or True Leaf, but it's getting very close to them. And then Valence Growworks is like based on that times by 4, 22 million. That's close to about a 15 to 20 PE ratio, which is better than Metafarm Labs. And I think moving forward, basically what I was chatting with that guy about is basically, Valence Growworks is going to have better net income versus their revenue. So say like they did 30 million next quarter, they're going to do like 10, 12 million in net income. Whereas Metafarm Labs, if they do 30 million next quarter, they're only going to do like 3 or 5 million in net income. So that's the difference, because Valence is a more efficient company as far as they're running the business, but Metafarm, and they have more technology to use. So Thermo Scientific Fisher Research, they backing Valence Growworks, and yeah, I think both those companies, like Metafarm Labs, will have bigger revenues, but Valence Growworks, they're gonna just, Metafarm Labs is gonna report, and it's probably gonna be above the 5.5. I mean, and very well, they're probably gonna do like 40 or 45 million maybe this quarter. I'm not sure exactly, but they're probably gonna do maybe like $6 to $9 million in net income. So it'll be above Valence, I believe. Organigram is very profitable as well as far as cannabis growers in Canada, and Supreme is kind of getting back up to there. So Supreme's a company, and then it's like National Cannabis, but that's how it goes. A lot of companies aren't very profitable. Like even Afri is trying to say that they're profitable, but they did minus 14. The only reason why they're profitable on a net income is because inventory for the cannabis. So they're adding all this cannabis, say maybe like 6,000 kilograms, and they're pricing it at like $4.50 or $5 a gram, and that's the difference between them being profitable and not, right? So yeah, Hexo is not in the greatest limelight right now with things going on, but I think they will be a big player in 2020. You know, they really need to start growing their revenues and again the USA. Anyways, that's enough about going through these companies, but this is very informative, and I hope you enjoyed this part of the video. Give me thumbs up again. Okay, so let's do this. So Tilt Holdings, all right. So this is the second time I'm doing this video. So I ended up messing it up last time where it was backwards, where that somehow like my technology was all messed up. So yeah, I'm going above and beyond. I just want to make the video right, prim and proper. So you know, that's what I'm doing. I'm doing it again. So basically, it's double bottoming around here for Zenabis, and like back here, this was like really high, and this is when all those shares started being added to the float with Zenabis, and before it was just Bevo Agro, and then they needed more funding, and then it just started getting killed and clobbered, and they need more financing. But you know, they're gonna be growing about 5,000 kilograms next month in November, and so based on like 3 to 350 gram, selling that should be worth about 15 to 17.5 million. Now what they're having problems with is with their packaging, so that's slowing down their ability to really sell. So they need to fix that. They are working on that, and they are seeing improvements, but they need to see even better improvements. I'm thinking that this quarter is not going to be nearly as good as last quarter. Last quarter was like 25 million, and a lot of it was to do with propagation, was about 17 to 18 million. I'm thinking there's probably not going to be too much money in propagation. I'm thinking that the revenues in cannabis are probably 10 to 15 million, maybe 16 million. That would be the biggest, and then I'm thinking maybe they did vegetables. I mean, maybe best case, maybe they did 10 to 15 million, and so maybe they'll be like close to what they did last quarter. But there's a chance that they don't even do 20 million in revenues with everything going. So, and I think they did do a loss. I'm thinking that they did do a loss, so it's not very good. They are working like they're very low cost gram. So you know, when they start really producing more, as well as you know, with the production, with getting them on packaging, and they're running it at like tip top shape, then they are gonna, you know, run really good. So they're about 180 million market cap in Canadian funds, about like 135 in USD funds, and I'm thinking they're probably going to do about 120 to 160 million in 2020. Probably like maybe 50 to 75 million in EBITDA, and then maybe like 20 to 40 million in net income. So I don't think for the next few quarters, I think they're going to take losses. And then I think come the summertime and like later in 2020, that's when they're going to start having like some blockbuster numbers where they start doing maybe like 10-20 million dollar net income, like close to that, maybe 5 to 20 million. I think they're going to start being profitable, but what they need to start doing is like 7,000 kilograms selling every quarter at like $3 to $4 a gram, and sell like 25 to 35 to 40 million in cannabis sales, and that's gonna really move them into a path to profitability a lot quicker. If they're only selling say like 7 to like $15 million in cannabis, then they're probably don't have the ability to be profitable. That's just my thinking. And then eventually they're gonna grow to like 60 to $90 million in cannabis sales, maybe in like by 2021. They need to get more distribution into Europe, you know, things of that nature. They need to grow their market share in Canada. So they're in a lot of places. They're in Shoppers Drug Mart. They're in a lot of provinces, and then they're selling to Tilray and Starseed. So they got a lot of distribution. They just need to keep growing. And once they're growing, like, say, I don't know, like 15,000 kilograms to like 30,000 kilograms every quarter, even at $3 to $5 a gram, when they're selling it, that'll push them to profitability. And it's gonna move their share price up. Uh, so based on what they're at right now is like 180 million, and then they have like $60 million in cash, but they have some debt that they owe, so that they're servicing debt right now. So there's a bearish case, but you look at the double bottom, and then it looks as though the cannabis space is going to start coming up. But when you're looking at, say, like MediPharm Labs or like Valence Growworks, that's got like 15 to 20 PE, or MediPharm Labs has like a 35 to 40 PE ratio. ZENA doesn't have that yet, right? So when they start doing, say, like 30 to 40 million in net income a year, and then they're maybe like at a 25 to 40 PE ratio, and they're doing like 25 to 40, that's gonna move them to have like a share price of like 350 to $5 to $6, right? Right now they don't deserve that based on like any other industry fundamentals, other than height. They don't deserve that, so they have to prove themselves. But I think buying at these prices is pretty solid. It could go a little bit lower. It's hard to say, but based on this Bollinger Band, it's pretty much at the bottom. It may go lower. It doesn't look like it. It just needs to show that the trend's changing. It may do that in the next day or two. It's hard to say, but it just got beat with the operational update. It looks like the Bollinger Band's kind of opening up, but we'll see. It's really kind of inconclusive for now. But I think if you're very big about this company and you want to scale into position, I think this is pretty much the best time. It could go lower, but I think this company is going to be around for quite a few years unless they get acquired. But the share price needs to go a lot higher for Andrew Grieve to make his money, and it has to be positive EBITDA and certain metrics that he wants. So again, this company wants to grow and get to like 95,000 kilograms by February 2020. So that'll be a big, mover. Like maybe they're selling at 350 to 5, like maybe 350 on average per gram at 95,000 kilograms. That's close to 350 million. And say they're doing like 100 to 150 million in net income when they get to that part, like in later 2020 to like mid 2021. From a year that standpoint, when they're doing those kind of numbers, that'll be big for Zenabis moving forward, and it's going to put them on the map as far as being a profitable company in the cannabis space. So let's move to the next company is Suniva, SNN, and SNN-VFF in America. So on the daily, they're kind of coming up on the RSI. They went below the 30 RSI when it hit down here. This was the news about them not being able to, the facility being done as fast. So it's trading high on the Bollinger Band, so it may retrace and may want to get back here. I'd like to see the Bollinger Band kind of expand and start going up before it's going to go up to like a lot higher. But there does seem to be some momentum in the company. Now you look at all this this volume rate when it went down. I want to see the volume big like that when it starts going up, and then you're going to start seeing it going to like $2, $2.50, $3, right? So anyways, this company's being very hyped up to be the canopy of California, and it hasn't executed on those big execution. But I do think the company is moving in the right direction, and I could see them in the next 6 to 12 months for sure get back to like $5 to $10. I think I want to sell out probably around like $6, somewhere around that range. And maybe I'm hoping that maybe early 2020 it'll get to those levels, and I'm out of my position. I have about 5,000 shares. And yeah, that's what I'm gonna do. But I think you know, the company is gonna be profitable. You know, so maybe it's better I should hold on long term to at least like 1,000 shares, because you know, there's a chance this company could be really profitable in California. It's not easy to get licensed in California, and they're gonna have a big facility in California and a dispensary on site and extraction capabilities. Yeah, I mean, they could be a company that's making the numbers of what Trulieve is doing, and at a 60 to maybe when they're further diluted, 80 million shares out, and then they're doing the same type of numbers of having 20 million in net income on, say, like 60 million revenues, and then they're, you know, then it's like 80 million a year, and you know, on like a 25 PE, that's worth like a 22 billion market cap. So then at 80, they would be worth about $25 if they went to a 2 billion market cap based on that. Now I want to see them get some funding from the Safe Bank Act as well. I'd love for them to see them get like 50 to 200 million dollars in debt for them to you know, grow the business, maybe acquire some things, or some things just to get them moving further along. Um, I mean, whether they use it or not, I just think that would be a big catalyst for them as well, just for the market to know that they're not cash restrained. So yeah, Suniva, I think they're going to be big, but they are in the proving grounds part of this cannabis industry right now, and they have to prove themselves just like pretty much any other company. But you know, they're getting back on, and they're trying to finish the facility and, you know, really grow their revenues. When they get into the facility, say like in the summertime, they could start doing maybe like 5 to 10 million in revenue every month. That's going to be very big, you know, 60 to 120 million in revenue, and then maybe by 2021 closer to like 15 to 30 million every month. So that would be very big for them when they're getting close to like 200 million in revenues. And I think they're gonna eventually, like, they're gonna run it really tight. So their efficiencies are gonna be really tight, and they'll be very profitable when they are. But again, there is risk behind them not executing fully, and that is the risk. That's why they're trading at $1.50. So anyways, that's Suniva, SNN. Tilt is another one that's very similar to all these two companies, but I think it has huge potential. Now it hit the high on the Bollinger Band on the daily, and you know, it's kind of coming up, but it's probably going to retrace maybe back to 35.40 again. It could just keep going up, The Bollinger Band expanded, maybe get a little bit out, and it go up to $80. There's a chance that they're gonna get the financing very soon. That would be a very big catalyst. It's like 120 million financing at 8%. That'd be pretty awesome for the company. They're gonna be reporting the end of November, I believe, and you know, it could be like a 50 million in revenues. I'm hoping that they're close to profitability, or they are profitable. I think they are running very tight. You know, I'm sure they could be positive EBITDA. It's hard to say, but the other, like the last quarter where they lost like 62 million, 50 million was invested options. So it wasn't from like operating the business that they did such a loss. So it's a different kind of stance that people don't really understand. But again, they do need to, like, when Coleman was running the business, and before Mark Scatterday, they didn't have the efficiencies that they're starting to have right now. I think Jupiter is going to have some deals with some Canadian companies. There's a good chance. I hear some really good things on Twitter. Some guy saying that their products all got like green lighted by the California regulations as far as their vapes go. Like everything was smooth as nails. And if it get passed in California, then the vapes are just good to go. as far as all across USA, because California has the most stringent as far as regulations go. So, I mean, if they're passing in California, I can't see why they're not going to pass in Canada, or if they've already passed in Canada. So, again, I think eventually, I think this is going to be a good story for Tilt. I could be wrong, but I could see it go back to $1, $1.50, $2 in the next 6 to 12 months or so. I could be wrong. I know that the options are set for $1.05 for all the owners, so that's where they want it to go to, and then they'll be in the money for their options. But yeah, it's just starting. This is on the daily. Now on the weekly, on the Bollinger Bands, it's about 73 cents, and then the high is 140, and the low is 14 cents. So that's the kind of trading range, very volatile cannabis sector that we're in. And you know, one of these days, like you look on the weekly, it just hit the 30 RSI. You know, one of these days it's going to start coming up, and you know, who knows how high it's going to go. It could go to $2 or $3 or $4 for all we know. This market is very crazy, and it's all based on volume and manipulation. And you know, I really like to see them be profitable as far as their fundamentals go. So that's the thing I'm gonna watch for. I haven't bought any more shares. I probably should have bought back when it was 25. Absolutely should have, but I was busy with my work, and it was very busy at the time with my job. So you know, I just didn't pay attention to that. I was just blinded by the light. So anyways, thanks for watching my video. I hope you gathered a lot of good gems of information to help you in your investing in the future, and investing right now. And if you're holding any of these stocks, these are my opinions only. Give me a thumbs up if you haven't already, and subscribe and share the video with friends and family. And keep compounding that info and listening to my lingo. And peace. I'm out.